Hello everyone and welcome to another Elliott Wave Charts of the Day video. My name is Eric. Today is the 22nd of July around 11 p.m. Eastern Times, and today we're going to take a look at Apple. Apple is one of the few instruments that has taken the last significant highs, and Apple, like the whole world index, the whole market, including the world index, is close to define if the market is going to stand within the cycle from June of 2019 or the market is going to start a correction of that cycle. What I've been saying is that if we take a look at Apple in the highest degree time frame, like every world index and every major instrument across the planet, Apple is been following without a doubt the significant highs and low, which is the lows on December, the lows on June of this year, and now Apple is in this price action from the lows of June. Technically, Apple, like the S&P, like Nasdaq, like most of the world indices, it needs to define if we're gonna stand in a series of 4 or 5, 3, 4, and 5 to the upside, or if we are ending here wave 1 of, and then Apple is gonna trade over here before going higher. So technically Apple needs to define this if it's gonna do a series of 3, 4, 5, 3, 4, 5 to stand within the cycle from June, or stand or ended the cycle in June and correct. As we always do in Elliott Wave Forecast, we go and we take the more aggressive view with the obvious. And the obvious is a break of these highs. S&P took it, the Dow Jones took it, the DAX took it, the FTSE took it, and some ETF has taken it. So it's a matter of time before Apple takes those highs. So looking at Apple in the 1 hour time frame, we're looking at the possibility that holding these lows around 202.23, which is last week lows, and buying a putback in 3 ways against those lows. There is an instrument that an index which is the Nikkei from Japan, and this instrument is leading into the next move and is the one that is going to define if Apple trade, like I say, in a series of 3, 4, and 5, which is our principal view, or Apple is gonna end this cycle and correct. The Nikkei trade identical to Apple, right? If this is the Nikkei 4-hour view, and if I put Apple in top of the Nikkei over here, I can see how they do agree. Sorry, there. How they do agree in every single in the highs and the lows. You're gonna see the agreements in the low of late December and agreement in June, right? So Apple is gonna, like I say, it needs to decide if it's gonna correct here or it's going to stand. But Nikkei already reacting higher here, and a break on Nikkei over here is gonna put Nikkei into a break. Also, it's gonna create a bullet sequence here, and that's why we forecasting that Apple it will stand here. So as you can see, Apple is Apple, but the Apple is Apple down here, but the Nikkei oscillate with the same swings. So in Elliott Wave Forecast, what we do is we take the path and the sequence of order to forecast another instrument. In other words, the forecast in the Nikkei is in Apple is based also in the idea that the S&P are ready to these highs. And now we see in the strong reaction in the Nikkei from Japan from these lows, and we feel good, and we don't see any reason to call we feel good, and we believe that the Nikkei has a higher percent of breaking higher here, and that's the one that is gonna take Apple in the extension higher. So for now, we're going with a more aggressive view, which is that Nikkei is ending from 202 5 weeks, it's going to put back and it's gonna continue in a continuation higher. So Apple ending these 5 weeks, a pullback and a continuation higher, and a break on Nikkei over here, it will guarantee almost that the market is gonna see a series of 4 and 5, and that Apple is going to stand within this weight over here until we finish here a wave 1 with the biggest pullback. So for now, like I say, Apple seems like is leading into the extension of wave 3, and we're waiting for the Nikkei from Japan for confirmation if this is gonna be the case. Worst case scenario in Apple is, like I say, know what our view that we end in wave 1 right there, and we're going to put back to around the 185, but that's not our view. Our view is the more aggressive view that we're gonna do something and oscillate higher like this, and we're gonna push that view onto the market proof. Otherwise, Nikkei breaking higher is a great confirmation that that's where we're going. But for now, that's our view, and the 1 hour view is nothing more than this, than saying against 202, keep an eyes on Nikkei. Nikkei breaks the highest, you buy the pullback here when that pullback happens. That's our video for today for charts of the day. If you like the correlation, how we correlate the cycles and the instrument, join us. We offer a free trial here, which is a 14-day trial. And at the moment, we do have a 2-for-1 promotion that is ending tomorrow around 3 p.m. Eastern Time. The promotion is ending. Wait for the price of 1, you get 2 months membership. Hope you guys enjoy the video. See you guys around. Thank you guys.